Welcome to the special presentation this week titled Worry-Free Investing Challenge Update. My name is Todd Schaefer, Manager of Research for VectorVest, and I'll be providing your presentation this evening. The first phase of our contest, trading system design, has been completed. All the entries have been entered and they have been scored. And so tonight I want to share with you some of the top performers from our stable of contestants. Let's review our best entries from several of these vantage points. Best total gain, best portfolio score, lowest Calmar ratio, that relationship between maximum drawdown and compounded rate of return, and an honorable mention slot. So let's get started. I've put together a spreadsheet of all of our contest metrics. We see we begin with the backtest name, the total value of the account at the end of the backtest, their winning percentage, the annualized rate of return, the compounded rate of return, and the max drawdown. All of these data points taken from the backtest itself. The next four columns are from the portfolio score calculator for the efficiency, Calmar, square root of the Calmar, and ultimately the portfolio score. So we'll begin with the best overall gain, so let's sort our database by total value, from largest to smallest. So first of all, our contestant ADT put together a fantastic total return on this portfolio, $64,834,038.01 on an initial investment of $100,000. As spectacular as that is, there are many contestants who are able to break that $1 million mark. In fact, 76 of them. But even so, as we continue scrolling lower in the list, we see the lowest return of our candidates at $322,176, a tripling of that $100,000 stake. Not a bad return considering it averages out to be 31.08% a year, or on a compounded basis 17.78% a year. So very nice performance by all involved, but let's scroll back up to the top and see how our best performer did it. Here are the performance metrics as taken from our back test. Let's move into the program and take a look. Here we see ADT used a timing signal of the DEW. That signal first generated on January 6th of 1997, and so we have that as the start date and the end date as per the rules ending in February on the 26th. And we see with that astonishing total return, we were able to have 53.25% winners, which is a fantastic winning percentage over a 20-year time span. All that translating into a compounded rate of return of 40.25% with a maximum drawdown of 42.4%. That drawdown most evident here in the financial collapse of 2008-2009. Looking at the equity curve, though, we do see that it has that nice steady bottom left to upper right curve that we like to see. But we also see a performance level robust enough to absorb that 42% drawdown and continue to perform at these exceptional levels. So that's the performance. Let's see how they did it. So let's click on Edit and we'll go into the trading plan. The first thing that struck me is that we use the DEW timing system, but ADT creatively used both sides of that trading signal, buying long as our rules required in both situations, but changing their strategy based on the higher risk of buying long positions in a down market. Let's take a deeper look by clicking on the Customize Trading System button. And we'll see when we get a DEW up signal, our trading rules say to run the custom search, which we'll review here in just a second. We'll apply a 35% gain, 15% stop loss, very reasonable. And in more settings, we'll trade a 10-stock portfolio, automatically replacing positions. No limit on the number of positions to open the day. We'll close any open positions on the system when we get that DEW up signal. We'll invest the defaults of the average value and odd lots. We'll not repurchase anything we currently own, and we have the defaults from there out. When we get a DEW down signal, We'll use our second search with a stop criteria of a 10% gain and a 7% loss, much tighter. And we'll see that we're also trading 20 positions, which means each position will be smaller, half the size of the original 10. Same amount of money deployed, just more positions. We'll automatically replace those positions with no limit. Again, we'll close any open positions we had from the upside. We use our defaults of average value odd lots and not replacing anything that not buying any more of anything we currently have, and also enforcing sector diversification by limiting to 3 stocks per sector. So that's the trading plan, which seems very reasonable so far. Let's close out of here and let's go take a look at their search. Here we have the first search to be used with the DEW up signal. By rule, we had to have an RS descending primary sort. Also by rule, we had to have an actual price greater than or equal to $1 and average volume greater than or equal to 100,000 shares. We also had to limit or eliminate ETFs. And so here's the operative function in this search. We're looking for the stock's RV divided by RT divided by actual price to be greater than or equal to a value of 1.5. So remember, the higher the numerator and the lower the denominator, the larger the quotient will be. And so this search favors stocks that have strong RV values and low price. A fairly constant theme I saw through the best performers. So that's the search for when the DEW is up. When the DEW is down, we'll use the second search. Again, the required RS default sort. Here we're looking for an RV value greater than or equal to 1.02. By the way, that's another easy way to eliminate ETFs. An RT value lower than 1. Again, that relationship of strong RV, low RT. A growth rate greater than 10%. A market cap that's in millions, so 5,000 million, which would be 5 billion. And then our defaults for the rules. Again, a very reasonable approach. Let's move back to the spreadsheet. Our next category to highlight was our portfolio score. So let's come to the score column and click on that drop down and sort it largest to smallest. And not surprisingly, we see ADT at the top of the list again. It's hard to overcome that kind of gain. Very powerful. But as we look at the overall results, we move quickly into the double digits. With our lowest score being a 7.23. Portfolio score is designed to balance the analysis of any portfolio's performance between its gain and its consistency of performance. So often, particularly in contest environments, we get so focused on overall gain that we forget that we need balance in the portfolio or trading plan for our trading success. Our next area of focus is the Calmar ratio. So let's sort by Calmar ratio from largest to smallest. Again, Calmar ratio is a relationship of maximum drawdown to the compounded rate of return. I like to say how much gain for how much pain did I achieve with the trading plan. Here with a Calmar ratio of 1.51, we see MLA was able to accomplish a 24.5% compounded rate of return, acceptable for most folks, I think, with a maximum drawdown of only 16.25%. All the while driving a top line improvement up to $6,704,415. That with a winning trade percentage of 46.5% and an overall portfolio score of 197. Let's go back to VectorVest to see how they did it. Here we see MLA also used the DEW timing signal. Here we have the performance metrics as we just covered in the spreadsheet. Look at the equity curve. We see that bottom left to upper right smoother price pattern. Do notice that in that same time frame of 2008-2009 we had a pullback, but nowhere as severe as we saw in our first contestants, That's evidenced by the much lower drawdown of only 16%. I also noticed that the performance started to tail off here at the end of the test period. But let's look at the details and see how MLA accomplished it. Clicking on Edit. Here we see first that we're only going to trade the upside of our DEW signal, and we're going to go to cash on the downside. Let's zoom in for more detail. Using their custom search, we'll employ a stop criteria of an 18% trailing stop. Nothing too unreasonable there. In more settings, we'll trade a 10-stock portfolio, automatically replacing those positions. We won't limit how many we open per day. We will close any positions on the turn. We have our default set for the balance of the trading rules. And of course, as we said, we'll go to cash on the DEW down. Let's take a look at the search detail. Here again we have our RS default sort. Our first parameter, we're looking for a new high over 26 weeks in the stock's price. We want the price to be between $2 and $6, which means the low price stocks now hitting new 26-week highs that are not sell rated meet all of our other defaults. And so to recap, high RS stocks at low dollar prices that are moving upward by virtue of their 26-week high. Again, a rather reasonable approach. Let's go back to the spreadsheet. So often it's the case with contests like this that it becomes what I call a backtest fest, where everyone just pursues the biggest numbers that they can achieve, divorcing from reality any reasonableness of whether or not the trading plan could actually work. And naturally, as we review the performance of these portfolios, we tend to gravitate to the extremes of the best and worst performing. So tonight I reserved my honorable mention spot to identify a search that's in the middle of the pack. One that's likely to do well because who knows what the future brings. And by avoiding overly narrow assumptions, could perform very well. And so I selected for honorable mention FDOB. Let's scroll it up to the top of the list. FDOB had a very respectable total value of $1,474,860.80. I think most of us would be happy with that compounded rate of return of about 14.5% per year. It had a max drawdown of 27.5%, which is at least in the tolerable range. And it had a portfolio score of a very respectable, but not flashy, 16.22. So let's go over to VectorVest and see how they achieve these numbers. First, we notice they use the confirmed calls market timing system. Here again we have all of our performance metrics. Looking at our equity curve, again, bottom left to upper right, relatively smooth, falling off a little bit at the end of the test period, a little bit flat between 2000 and 2003, but held its own through that bear market. Let's take a look at the trading plan detail. If we click on the edit button, again we'll go along with our custom search on the confirmed up call and hold through the confirmed down call. Let's take a look at that in more detail. When we get the confirmed up call, we'll run their custom search. We'll apply a stop loss of a 35% gain and a 9% loss. Very reasonable. In the more settings section, we'll trade 10 stock positions, automatically replacing those. We won't be closing any of those positions with a change in market timing signal. So we'll hold through the downs, trying to hold on to these stocks for the long term. In keeping with Dr. Dolito's previous example, we're not going to replace those stocks once they sell out. We're also going to limit to 2 stocks per industry and a maximum percentage of the average volume of 2%. And again, when the confirmed down call comes, we'll hold through that signal. Let's go see what we'll do for our search. We begin with all of our rules-driven defaults of the RS descending sort, price and volume limitations, and the elimination of ETFs. But here's the secret sauce of this search. We're looking for high RS stocks that are in the top 5 industry groups by virtue of their RT score. So safe stocks in rising industries. And that sounds pretty reasonable to me, no matter what the market might throw at us. So there we have it, just a small sampling of some of the entries into our Worry-Free Investing Challenge contest. I'd like to thank all of our entrants for their hard work in developing these trading plans and wish them, of course, all the best of luck. Of course, the real excitement will start when we start trading these in the live market on May 2nd. That'll wrap up our presentation for tonight. Thank you for watching.